Hey everybody, John Felici here, Security National Mortgage Company. And real quick, before we get started, this camera, it's weird. It's going to bug me the whole time. Okay, as I was doing that, I had I have to pull these down. Every time I move, my gigantic biceps get on the other side of those sleeves there. But as I was fixing my camera just then, I was really worried because I was like, John, you're going to move this and you're going to screw it up more, and then you're going to have to hit end on the video, and then I'm going to come back and I have to restart it. It just sucks. Okay, so anyways, glad that I fixed it. Once again, John Felici, Security National Mortgage Company. And what am I here to talk to you about today? Something that, this sneaks up from time to time, but it's about upfront fees as it pertains to mortgage lenders. First off, right off the bat, if your mortgage lender is asking you for any type of an upfront fee, you should tell that mortgage lender, I'm going to see John, because there should not be upfront fees. It is possible, of course, for a mortgage lender to charge upfront fees, but I really think that in the mortgage industry, if you're charging upfront fees, it's probably because you don't think that the job is ultimately going to get done. Now, let me differentiate, though. An upfront fee that I'm talking about is something like, for example, paying for a credit report up front. If a mortgage lender asks you to pay for a credit report up front, that means that that mortgage lender probably does not have the type of money, assets, money in the bank, whatever, to be able to pay for your credit report, in which case, I don't know what that mortgage lender is doing, loaning hundreds of thousands, millions of dollars if they're not paying for their own credit reports. That's a very small, insignificant bill in the way of a mortgage company. It is part of the bills. We do pay for that. Credit reports, an individual credit report costs probably $12.50. A joint could be $25 or $30. Various things that you get on credit reports can rack up the different money, but those are generally things that the mortgage company consider to be expenses of their own. So if you are getting charged for a mortgage credit report up front by your mortgage lender, I would go ahead and run. The other thing, if mortgage companies try to charge underwriting fees, processing fees, things like that, those are things that are normally associated with you obtaining a mortgage loan, but they are not things that are collected until closing. They're billed on the settlement statement and paid for through the... Sorry about that. Something popped up. They're paid for at closing. Now let me make a differentiation about upfront fees. Now, what I'm not including to talk about as an upfront fee is, for example, an earnest money deposit. Now, whenever you go into contract and purchase a home, you are almost definitely going to be required to put up an earnest money deposit. This is not money that goes to the lending institution. This is money in connection with the purchase agreement for the home that you want to buy. It's something that's generally required by the seller, the real estate agent, and it's kind of like a good faith deposit for them taking their home off of the market. So for example, you said you like my house, you want to make me an offer, we're going to go into contract, you're going to pay me $500 that is going to be held in a trust or an escrow account. That means that that $500 that you gave that real estate agent for the escrow deposit, that doesn't go to the seller. They don't hang on to that until closing. It's put into an uninterested party, a third-party trust, which is generally going to be the title company. And the point of that money is, in the event that you default on the contract, maybe you don't buy the house because you decide you don't like the neighbors for no good reason, your money can be kept as liquidated damages for the seller taking their home off the market and costing them time finding another buyer, etc. On the other hand, let's just say that you go into contract, you put your $500 up for an earnest money deposit, goes into escrow, and let's say that your loan is denied. Well, whenever you go into contract, you're also going to sign something called a financing supplement. The financing supplement stipulates that you're going to buy this house based on the type of loan that you were initially approved for X interest rate and X down payment. So you're agreeing to buy this home with the assumption that you could get a mortgage loan. You did not agree to buy this home for cash. So if for any reason, if you get denied for your loan, be it your fault, be it whoever's fault, the contract is then null and void. Your earnest money is refunded to you. Now, in the event that the transaction goes according to plan, that money is to be used towards the transaction. So for example, let's just say that you had a $4,000 down payment and you've given a $500 earnest money deposit. Well, then what that means is the earnest money is deducted from the total amount due at closing. In the case of $4,000, that means that you're no longer bringing $4,000, you're bringing $3,500. So then the earnest deposit is not an example of an upfront fee. That is a deposit that's put on a contract, in good faith between you and the seller, real estate agent, everybody involved, that you're going to carry through with your end of the transaction. If you default on your end, then the seller can keep your money. If you carry through with the transaction and it goes to plan, the money will be used towards the transaction. Other fees that can be paid for up front. Appraisal, that is not what I would consider an upfront fee. An appraiser, sorry, ear itched. An appraiser is a third party. For example, let's just say that you buy a house or you go to buy a house and the home does not pass the appraisal inspection. Maybe it doesn't appraise for enough money. Maybe there are horrible termite damage that's not going to be acceptable and the seller will not fix these things. Well, then that house does not meet the criteria to pass for the mortgage loan, and it's probably not a good idea for you to buy anyways. Now, the problem there is that if the appraiser was not paid up front, what happens when the contract falls through and you don't want to buy the house anymore because of whatever reason? Well, the appraiser still did his job. He is a third party. He's hired to do a job by you, the buyer, and his job is to determine if this home that you have decided to buy can meet and pass appraisal inspection, be it sufficient collateral, meaning value, and then of course the condition of the property is all in order and everything is good. So then that is the thing. I mean, with the appraiser, if the house doesn't pass the appraisal inspection and the appraisal has not been done, more than likely the people in the transaction don't want to pay for an appraisal for a house that they were unable to buy, which is probably the biggest reason why the appraiser is going to be paid up front. More things. It's going to be paid up front because he does his job, and just like all of us, when you do your job, you expect to be paid. So that's the appraiser. Appraisals can, however, sometimes be rolled into the transaction, but if the loan craps out for some reason, more than likely your mortgage lender is going to come back and try to get you to pay for that because they don't want to take it out of their paycheck. So appraisals are usually paid for up front, but that is not an example of a fee. That is something that is a requirement for you to buy a house, a loan. I always equate it to kind of like if you went to go and apply for a car loan, for example, and your driver's license was expired. And they said, okay, go get your driver's license renewed, and you come back and buy the house or buy the car. So you go, you pay your $20, you get your driver's license renewed. Well, just because you got your driver's license renewed does not guarantee you approval of the car loan. Just like the appraisal, you get the appraisal done to determine if the house meets the criteria for the loan that you want. Where the condition of the home should really be paid attention to is this is once again a big reason why that you want to have a good real estate agent whenever you are going into these transactions. I have had multiple times where you have a real estate agent who is not experienced with the different criteria which is required by FHA, VA, USDA, conventional. And, there's a lot of obvious things. I mean, things like wood rot, for example. Does the roof have too many layers on it? Do the windows look energy efficient? When was the house built? Before 1973, is there flaking paint on the house? Before 1973, there was lead-based paint. If you have a house built before 1973 and you've got flaking paint on it, more than likely, the underwriter, the appraiser, they're going to require that that house be scraped and painted. So this is the point of going with a good real estate agent that knows what they're doing, because me, as your mortgage lender, I can tell you that I can protect your interest when it comes to interest rates, the money that you want to bring in, the payment that you want to have for your mortgage loan, but I'm not your eyes and ears when it comes to making an offer on a property. So going out there with a real estate agent that is unseasoned and not versed in their profession, you could wind up going in and making an offer on a home that maybe never had a chance to pass appraisal inspection. Or maybe there needed to be some things that were negotiated into the contract to be repaired prior to going into contract. So I've seen a lot of situations like that where things that could have been avoided up front. This is why I always say, I didn't want to get this into like a real estate agent talk, but the truth of it is that, with social media these days, it is not that hard to figure out who's doing what. I'm not saying there's anything against part-time real estate agents in any way, shape, or form. Everybody has to start out somewhere. But what I always say is, you're thinking about a real estate agent, check their social media. Are they doing yoga at 11 a.m. or are they listing houses on their Facebook to sell? How many listings do they have? What do they talk about during the day? Fingernails in front of the Mercedes steering wheel? Or are they at loan closings? Okay, fingernails in front of the Mercedes steering wheel. I know that looks neat, but I just want to let everybody know, anybody can have a Mercedes these days. You go to CarMax and get one. It's not that big a deal, so sorry. So anyways, stop the fingernails in front of the Mercedes thing. Please don't think that I'm talking directly to anybody, because there's a whole bunch of you. I really don't even pay attention to which one does it. So anyways, make sure to pay attention to what your real estate agent is doing. Look and see how many houses they have listed, things like that. Because things like, the appraisal inspection, you could avoid wasting money on things like that whenever you have somebody who's good eyes and ears, for that type of thing. So back to upfront fees. Once again, credit reports, if people are asking you to pay credit reports up front, you don't want to do that. I mean, that's a mortgage lender that's obviously having some financial problems. If they're not able to pay for that up front, that's a normal bill for a mortgage company, a mortgage lender. Things like underwriting, processing fees, you don't want to pay for those things up front. That does not happen unless you're getting shammed. I don't even know who does that, but I know that there are people out there that do. Other than that, earnest deposits. Like I said, earnest deposit is not necessarily an upfront fee. That is a form of good faith on the purchase contract between you and the seller, the real estate agents, and everybody involved. And then again, appraisals. Appraisal is something that is required for you to purchase a home. That is not necessarily a fee, so to speak. It's something that you should want to get done in order to know what kind of place you're dealing with. So, hey, anybody out there, if you're getting charged upfront fees, talk to me. If you need to know a real estate agent that knows what to look for in appraisal, talk to me, because I know. Get you in the right direction, tell you whatever. If you want to know the ones that go do yoga all day long too, I can tell you those too, because it happens. I don't know. So anyways, guys, John Felici, Security National Mortgage Company. I hope that everybody has a great day. I hope it's been a great Monday. And once again, if I can answer any questions, help you out with anything, please feel free to give me a call, 918-630-1991, or you can message me right here on Facebook. So, hey, have a good day. I'll see everybody soon, or maybe not. I'm going to the gym to do yoga.